welcome to the Deep Dive. Today we're going to be taking a deep dive into charitable contribution deductions.
Ooh, fun.
Yeah. Looks like we've got some excerpts from IRS publication 526.
Perfect.
Which is really the ultimate guide on this topic.
Absolutely.
So we're going to try to pull out the need-to-know info from qualifying organizations, deductible expenses, to those interesting special rules and limits.
All right. I'm ready.
So to start with the basics.
Okay.
What does the IRS even consider a charitable contribution?
Right.
I mean, I might think giving my neighbor $5 for lemonade counts, but
That's a good question.
does the IRS?
Well, your neighbor might appreciate it, but the IRS wouldn't consider that a tax-deductible charitable contribution.
Okay.
It really comes down to a few key things.
Okay.
It has to be a gift
Okay.
made to a qualified organization with no expectation of getting something of equal value in return.
So that feeling of doing good is part of it, but it also needs to fit into a specific structure.
Yeah.
For tax purposes.
Yeah, exactly.
Okay. Like you're not getting a product or service in return.
That makes sense.
Yeah.
Okay, so who are these qualified organizations then?
So the IRS publication 526 actually lists them out.
Okay.
And it's a pretty broad range.
Okay.
We're talking religious, educational, scientific, literary organizations, even groups that work to prevent cruelty to children or animals.
So the usual suspects are churches, schools, hospitals.
Yeah.
But it goes beyond that, right?
Absolutely. Think Girl Scouts, Boy Scouts of America.
Okay.
Even nonprofit daycare centers can count.
Wait, daycare centers?
Yeah.
So if I'm paying tuition at a nonprofit daycare, is that a charitable contribution?
That's where it gets interesting.
Okay.
Even though the daycare might be a qualified organization, tuition payments don't count as a charitable contribution.
Okay.
And that applies to religious schools, too.
Really?
There are other tax benefits for education expenses.
Okay.
But that's a whole other deep dive.
Yeah.
We won't go there today.
Good to know.
It seems like there are a lot of nuances here.
Absolutely.
Anything else that stands out in this qualified organizations list?
What's fascinating here is the mention of Israeli charities.
Okay.
There's actually a special rule for those.
Okay.
You can only deduct up to 25% of your adjusted gross income, specifically income from Israeli sources.
Oh, I never knew that.
Yeah, kind of a niche one.
Yeah.
But it's there.
Okay, so we've covered who we can donate to.
Right.
Now let's get to the good stuff.
Yes.
What can we actually deduct?
Mm-hmm.
I mean, obviously cash donations count.
Right.
But it goes beyond that, right?
Right. You can also deduct donations of property.
Okay.
And that's where things get really interesting.
Property, like, say, my entire shoe collection.
Maybe, but you'd need to determine its fair market value.
Okay.
You can generally deduct the fair market value of the property at the time you donate it.
Fair market value? I feel like that could be a bit subjective.
You're right. It can be a little tricky. It's essentially what a willing buyer would pay a willing seller in an arm's length transaction. So no sweetheart deals with your favorite charity, unfortunately.
Okay, so no inflating the value of my shoe collection just because I think it's awesome?
Right.
What else besides money and property can be deducted?
Believe it or not, you can actually deduct out-of-pocket expenses related to volunteering.
Wait, really?
Yeah.
Like what kinds of expenses?
Things like travel costs to and from volunteer events.
Okay.
Supplies you purchase for volunteer activities. Even the cost of a required uniform.
Okay.
And here's another interesting one. If you use your car for charity work, you can deduct mileage or your actual car expenses if they're higher.
That's amazing.
Yeah.
So all those trips to the animal shelter to walk dogs actually add up to something.
That's right.
I'm sensing a theme here. Volunteering might be good for the soul and the wallet.
It's a win-win.
But let's be real.
Okay.
Are there things I can't deduct, even if they seem charitable on the surface?
There are definitely some things that don't qualify.
Okay.
We already mentioned tuition payments even for religious schools.
Right.
And remember how we talked about qualified organizations?
Yeah.
You can't just give money directly to someone in need, no matter how worthy the cause.
Right.
It has to go through a qualified organization.
Okay.
Also, political contributions, even if you feel strongly about the candidate's stance on certain issues, aren't considered charitable donations.
Right.
They fall under different rules.
Makes sense. It keeps things separate and organized.
Exactly.
Anything else that might surprise people?
Here's one that might catch some people off guard.
Okay.
You can't deduct country club dues.
Really?
Or fees you pay to fraternal orders or similar groups.
Interesting.
Yeah.
I guess those are seen more as personal benefits than true charitable contributions.
Yeah, exactly.
So it's really important to understand those distinctions.
Yeah, for sure.
Okay, back to volunteering for a second.
Okay.
I volunteer a lot of my time,
Mhm.
which obviously is valuable.
Yes.
But can I actually deduct the value of my time?
That's a question we get a lot.
Yeah.
And unfortunately, no matter how many hours you put in or how valuable your skills are, you can't deduct the value of your time.
Okay, so all that time I spend organizing fundraisers, walking dogs at the shelter, tutoring kids.
Right.
I can't put a dollar amount on that and deduct it.
Sadly, no.
Yeah.
But remember, those out-of-pocket expenses you incur while volunteering are deductible.
Okay.
So keep track of your mileage, the cost of supplies, and any other expenses related to your volunteer work.
All right. Fair enough.
Yeah.
Let's get back to donating property for a moment.
Okay.
Because I know a lot of people donate things like cars, boats, even artwork to charities.
You're right. And there are some specific rules based on the type of vehicle and how the charity uses it.
So it's not as simple as dropping off my rusty old bicycle and claiming a huge deduction.
Not quite. For example, if you donate a car and the charity sells it, your deduction might be limited to the selling price.
Okay.
Even if you think the car is worth more.
Right.
And donating stocks can be particularly advantageous.
Okay.
But there are rules depending on the type of stock and the organization you're donating to.
I'm starting to see that this is where things can get really interesting.
Yeah.
But also a little complicated.
Yes, definitely.
Is there anything else about donating property that we should highlight for our listeners?
Absolutely. If you're donating clothing or household items, and those items are valued over $500, they absolutely must be in good usable condition.
Okay.
If they're not, you'll need to get a qualified appraisal.
Oh.
Which can be a bit of a hassle.
Good use condition. Got it.
Yeah.
No donating those holy socks or that wobbly bookshelf.
Exactly.
Okay, this all sounds great.
Yeah.
But we haven't talked about the dreaded L word.
Oh.
Limits? Are there limits on how much we can deduct for charitable contributions?
Yes, there are.
Okay.
But the good news is that for most people, if your total contributions are 20% or less of your adjusted gross income, you don't have to worry about limits.
Well, that's a relief.
Yeah.
But for those of us who are really feeling generous, or maybe planning some big donations, what are we looking at?
Well, generally speaking, the limit is a percentage of your adjusted gross income, or AGI.
Okay.
It could be 20%, 30%, 50%, or even 60%,
Okay.
depending on the type of organization and what you donate.
Okay, those percentages are swirling around in my head.
Yeah.
Can we break it down a little further?
Sure.
Let's say I'm donating cash to a common 50% limit organization like my local church.
Great example. So starting with the 2022 tax year, your deduction for cash contributions to those 50% limit organizations is actually capped at 60% of your AGI.
Hold on, 60%?
Yeah.
But I thought you said the limit for those organizations was 50%.
You're right, I did.
Okay.
But it's actually a two-step process. You get to take advantage of this special 60% AGI limit for cash donations first. Then your deduction for any other contributions to that organization is limited to 50% of your AGI, minus whatever you already deducted under that 60% limit.
Okay, so it's like a special bonus for cash donations.
Exactly.
I like it.
Yeah.
But it gets a little tricky if you're making different types of donations to the same organization. What if I donate cash and clothing to my church?
Yeah.
Which limit applies to which donation?
You're thinking like a pro. That's where it gets a little more complex.
Okay.
The 60% limit only applies to cash contributions.
Okay.
Your donation of clothing, even though it's to the same organization, would fall under the 50% limit.
Okay.
And you'd have to subtract the amount of cash you already deducted using that 60% limit.
Okay. I'm starting to see why people get confused with these rules.
Yeah, there are a lot of moving parts.
So much to keep track of.
Yeah.
What if I donate to an organization that's not a 50% limit organization?
Good question.
Is there a different limit?
Yes. In that case, we're generally looking at a 30% AGI limit. Okay. But remember, there are always exceptions and special rules.
Right.
Especially when it comes to donating property.
I was going to say property donations always seem to have their own set of quirks.
Absolutely.
Is there any way to simplify all this?
I think the main takeaway here is that your NGI plays a huge role in determining your deduction limit. So the higher your AGI, the higher your potential deduction.
That makes sense.
Yeah.
But what if my generous spirit leads me to donate more than I'm allowed to deduct in a given year?
Good question.
Am I just out of luck?
Not at all.
Yeah.
If you exceed your AGI limit for a particular year, you can usually carry those excess contributions forward and deduct them over the next 5 years.
5 years. Wow, that's pretty generous of the IRS.
It is.
So I can spread the love and the tax benefits over time.
Exactly.
Okay, last question before we move on.
Okay.
Record keeping. I know this is crucial for any deduction.
Right.
What do I absolutely need to have on hand to substantiate my charitable contributions?
You're right. Good record keeping is essential for cash donations, no matter the amount.
Right.
Hang on to those bank records or receipts from the organization.
Okay.
But here's the kicker for any donation over $250.
Okay.
You also need a written acknowledgement from the charity.
Written acknowledgement, so a thank you email from the charity isn't going to cut it?
Not for donations over $250.
Okay.
The IRS has specific requirements for these acknowledgments.
Okay.
So make sure the charity provides you with the proper documentation. Otherwise, you might run into trouble when you try to claim that deduction.
Okay, good to know.
Yeah.
And what about non-cash contributions?
Okay.
Like if I donate clothes or furniture to a thrift store, what kind of records do I need?
The same principle applies. Documentation is key. For donations under $250, simple receipt from the charity should be sufficient.
Okay.
But as the donation amount goes up, so do the record-keeping requirements.
Okay, so more money, more paperwork.
Pretty much.
Got it. It seems like it's always best to err on the side of keeping detailed records.
Absolutely.
Better safe than sorry.
Good record-keeping can save you a lot of stress and headaches come tax time.
True.
Plus, it helps ensure you get every penny of those deductions you're entitled to.
Excellent advice.
Well,
I think we've covered a lot of ground in this first part of our deep dive.
Yeah, we have.
We've gone over who qualifies as a charitable organization, what we can and can't deduct.
Right.
And those all-important AGI limits.
Absolutely. Just scratching the surface, though.
Oh, really?
There's still so much more to explore when it comes to maximizing your charitable contributions.
Okay.
And getting the most out of your generosity.
Sounds like we're just getting started. Don't go anywhere, listeners. We'll be right back with even more insights into charitable contribution deductions on the deep dive.
Looking forward to it.
Welcome back to the deep dive. We just went through some of the basics of charitable contribution deductions.
Yeah, it's a lot to take in.
Now I'm curious to explore some of those more complex situations, especially when it comes to donating property.
You're right. Property donations can be a bit of a labyrinth.
Yeah.
But they also offer some unique opportunities for maximizing your deductions and your impact.
Okay, so let's dive into those complexities.
Okay.
What are some of the more unusual or nuanced situations we should be aware of when it comes to donating property?
One area that has its own set of rules is donating a partial interest in property.
Partial interest? What does that even mean?
It essentially means donating less than your full ownership of something.
Okay.
For example, let's say you own a beautiful piece of land with a stunning view.
Yeah.
You could donate a conservation easement to a land trust.
Okay.
Which would restrict development on that land and preserve its natural beauty forever.
Ah, so I'm not donating the land itself, but I'm donating the right to develop it.
Exactly.
That's pretty clever.
It is.
It lets me support conservation efforts while still retaining ownership of the land.
Right. It's a great way to balance your personal interests with your philanthropic goals.
I like it.
Another example of donating a partial interest is a remainder interest in your home.
Remainder interest. That sounds intriguing. What does that entail?
Let's say you have a beloved vacation home that you want to eventually leave to your favorite charity.
Okay.
You can donate a remainder interest, which means you retain the right to live in the home for the rest of your life. But once you're gone, the property goes to the charity.
So it's like a planned gift.
Right.
I get to enjoy the property while I'm still around, and the charity benefits in the long run.
Exactly.
I like that. Seems like a really thoughtful way to give. Are there other types of partial interest donations?
There are, but the IRS is pretty particular about which ones qualify for a deduction.
Okay.
Generally, you can only deduct contributions of a partial interest.
Okay.
If you and the charity were the only ones who held interest in the property right before the donation.
Okay, so if I co-owned a vintage car with a friend and we both decided to donate our shares to a museum,
yes,
that would probably count as a partial interest donation.
You got it.
Okay.
But if you bought a share of an antique vase from someone who had already donated their share to a museum,
right,
then your donation wouldn't qualify.
So those pre-existing ownership structures really matter.
Yes, they do.
It's important to understand those nuances.
Yeah.
What about other types of property donations? We've talked about cars, land, even household items.
Right.
Are there any other categories that have their own unique guidelines?
Absolutely. Donating intellectual property.
Okay.
Things like patents, trademarks, or copyrights also has its own set of rules.
Okay.
And there are special rules for donating inventory from your business,
Okay.
as well as for donating certain types of food inventory.
Food inventory.
Yeah.
So if I own a bakery and I donate my day-old bread to a local food bank, can I get a deduction for that?
Yes, there's a specific formula for calculating that deduction, and it has to be wholesome food going to a qualified organization that will use it to care for the ill, needy, or infants.
Okay.
But it's a wonderful way to reduce food waste and support your community at the same time.
That's a win-win in my book.
Absolutely.
Speaking of win-win situations, we touched on bargain sales earlier.
Yeah.
Can you remind me what those are?
Right.
And why they might be a good option for charitable giving?
A bargain sale is essentially when you sell something to a charity for less than its fair market value.
Okay.
It's like giving them a discount.
Right.
And you get to claim a charitable deduction for the difference between the selling price and the fair market value.
So the charity gets a good deal, and I get a tax break.
Exactly.
I like where this is going.
It's a good one.
Are there any special considerations or rules we need to be aware of with bargain sales?
Just like with everything else, there are rules and formulas for calculating the deduction. Publication 526 has all the details you need. But the key takeaway is that it can be a beneficial way to support a charity, while also potentially reducing your tax burden.
Got it. It's all about understanding the options.
Yeah.
And choosing the strategies that align with our giving goals and our financial situation.
Exactly.
Now, before we wrap up this section, I want to circle back to those substantiation requirements.
Okay.
It seems like every time we delve deeper into a specific type of donation, there's another layer of documentation required.
Right.
Can we review the key things listeners need to keep in mind?
Absolutely. It's easy to get caught up in the excitement of giving and forget about the paperwork.
Right.
But good record keeping is absolutely essential.
I couldn't agree more.
Yeah.
So let's break it down. What are the must-haves when it comes to documenting our charitable contributions?
For cash donations, no matter how small, always keep a record of the transaction, whether it's a bank statement or a receipt from the charity.
Okay.
But for any donation over $250, you also need a written acknowledgement from the organization. And this is where it gets important.
Okay, I'm all ears. What's so crucial about these written acknowledgments?
They have to include specific information to be valid.
Okay.
They must state the amount of cash contributed.
Okay.
And crucially, whether you received any goods or services in return for your donation.
So if I donate $500 to attend a charity gala and I get a fancy dinner and entertainment in return,
right,
that needs to be documented in the acknowledgement.
Exactly. The acknowledgement should describe those benefits.
Okay.
And provide a good faith estimate of their value.
Got it.
This helps ensure you're accurately calculating your deduction, taking into account the value of any benefits you received.
Good to know. It seems like those gala dinners aren't quite as free as they appear. Now, what about non-cash contributions? Are the rules for documenting those the same?
The basic principle is the same. You need documentation.
Okay.
For donations, less than $250 a receipt from the charity is usually enough.
Okay.
But as the donation amount increases, so do the record-keeping requirements.
Okay, so more money, more paperwork, got it.
Yeah.
But what happens when we're talking about really significant donations?
Okay.
Like, what if I donate a valuable piece of art or a large sum of money? What are the rules for those?
You're thinking big picture. I like it. For donations over $5,000,
Okay.
you'll need to go a step further.
Okay.
You'll need a qualified appraisal from a qualified appraiser.
Okay.
And you'll need to file Form 8283 along with your tax return.
Form 8283. Okay, that sounds a little daunting.
It can be.
But I guess when we're talking about those kinds of donations, it makes sense that the IRS wants more detailed documentation.
Yeah, they want to make sure everything's legit.
Right. And those appraisals seem particularly important.
They are. A qualified appraisal needs to meet specific IRS standards.
Right.
So it's not just about getting any old appraisals.
Yeah.
You need to find a qualified appraiser who knows the ins and outs of IRS regulations.
That's a great point. It's all about finding the right professionals to guide us through these complexities. Any parting words of wisdom when it comes to substantiation?
Just this, don't wait until tax time to scramble for receipts and documentation.
Right.
Develop good record-keeping habits throughout the year. Your future self will thank you.
Words to live by. All right, listeners, we've delved deep into some of the more intricate aspects of charitable giving.
We have.
But don't worry, we're not done yet. When we come back, we'll explore some practical strategies for maximizing your deductions and making the most of your charitable contributions. Stay tuned for the final part of our deep dive. Welcome back to the deep dive. We've covered a lot of ground, from the basics of charitable contributions to the intricacies of donating property.
It's a deep dive for sure.
But now I'm really excited to get into some practical strategies.
Yes.
How can we actually maximize those deductions and make our charitable dollars go further?
I'm glad you asked. There are some really smart strategies you can use to boost your impact and potentially lower your tax bill at the same time.
Okay, I'm ready to get strategic.
All right.
What are some of the most effective approaches?
One strategy that can be especially beneficial is called bunching your donations.
Bunching, like grapes.
Not exactly, although I like the image. In this case, bunching means concentrating your charitable giving into certain years rather than spreading it out evenly.
Okay, so instead of giving a little bit each year, I might save up and make a larger donation every other year, or maybe even every few years.
Exactly.
What's the benefit of that?
Remember those AGI limits we talked about?
Yes.
Well, by bunching your donations, you can potentially exceed those limits in specific years.
Okay.
Allowing you to itemize your deductions and get a bigger tax benefit.
So I might not hit those higher AGI thresholds every year if I give smaller amounts.
Right.
But if I bunch my donations, I'm more likely to exceed those limits in certain years and reap the tax benefits.
Exactly.
That makes a lot of sense. Are there any tools or strategies that work well with bunching?
There are, and one tool that's particularly well suited for bunching is a donor-advised fund.
Okay.
Have you ever heard of those?
I've heard the term thrown around, but honestly, I don't really understand how they work.
Okay, sure.
Do you break it down for me?
A donor-advised fund is kind of like a charitable savings account.
Okay.
You make a donation to the fund. You get the tax deduction for that donation up front.
Okay.
And then you can advise the fund on how to distribute that money to your favorite charities over time.
So let's say I want to bunch my donations.
Right.
I could make a large contribution to a donor-advised fund this year, take the tax deduction for that large amount now, and then spread out the actual grants to charities over the next few years. Is that right?
That's exactly it. It gives you a lot of flexibility and control over your giving.
Okay.
You can really tailor your strategy to your financial situation and philanthropic goals.
That's brilliant. I love how it combines tax benefits with a long-term giving strategy.
It's a great tool.
What other strategies should we consider, especially when we're thinking about maximizing those deductions?
Another powerful strategy is donating appreciated assets, specifically long-term appreciated stock.
Now, we talked about donating property, but this sounds different.
Right.
What makes appreciated stock a particularly good donation?
When you donate stock that has gone up in value, you generally avoid paying capital gains tax on that appreciation.
So not only am I supporting a charity, but I'm also potentially lowering my tax bill.
Exactly.
That sounds like a win-win to me.
It is, and the charity receives the full market value of the stock.
Wow.
It's a truly win-win situation.
I'm sold. Are there any downsides or things to watch out for with this strategy?
There are a few things to keep in mind.
Okay.
There are certain restrictions, especially if you're donating appreciated stock to a private foundation.
Okay.
And of course, those AGI limits still apply.
Right, those pesky limits. So it's always a good idea to consult with a tax professional.
Yes, always a good idea.
To make sure this strategy aligns with our overall financial plan.
For sure.
What other tips do you have for making the most of our charitable giving?
I think one of the most important things is to think beyond cash and stock.
Okay.
There are so many creative ways to give back and support the causes you care about.
I love that.
Yeah.
Tell me more. What are some of these creative giving options?
You could donate a life insurance policy you no longer need.
Okay.
Or establish a charitable trust to provide ongoing support for a specific cause.
Okay.
You could even include a charitable bequest in your will as a way to leave a lasting legacy.
Legacy giving, that's a really powerful way to create a ripple effect that extends far beyond our lifetime.
It is.
I love it. Okay, I feel like we've truly explored every nook and cranny of charitable contribution deductions.
I think so.
Any final words of wisdom to leave our listeners with?
I think the most important takeaway is this giving back is incredibly rewarding, both personally and financially. Do your research, choose causes you're passionate about, and don't be afraid to get creative with your giving.
Perfectly said. Thanks for joining us for this deep dive. And as always, we encourage you to consult with a tax professional for personalized advice. Happy giving.